Whoa. Hey everyone, let's bring this back down. Well, hey everyone, this is James coming to you. It is 3:30 p.m. on Friday, and my computer just froze. Isn't that lovely? So I don't know if you can see me or not, but that should be fun. Well, alrighty then. Hate when this happens. 3:31, Friday, April 21st, 2017. Option expired today. So, this is James from Dividend Stock Talk. You guys all know that we love to do dividends, and we do that because we want cash flow, plain and simple. You know, the company's gonna pay out a dividend if they're profitable. That's good. Company's going to pay out a dividend if they're profitable. So what do I want to do? I want to collect some of the dividends. The only way to do that is make sure I own the stock and be eligible for a dividend check. The only way I can do that is make sure I own it before the EX date, and I hold on to it until the date of record, which is usually 2 days later. Now, our theory is we go and we buy the stock before the EX date, hold it for a little bit, and then we decide whether or not we want to collect the profits or we want to just collect a dividend. And there's a lot of ways we can do that. So what we're going to do is we're going to show you a few ways and see what we can do. All right, first off, we want to look at our dividends on steroids. This is where we buy the stock 10-day. I want to look at dividends on steroids. This is where we buy the stock 10 days prior to the EX date. We hold on to it for that 10-day period, and we see if we can catch a 2 to 2.5% increase in price. Then we jump on out. If we don't, we hold on and grab the dividend, and then we turn around and resell it for the same price we paid for it. That was called dividend capturing. Okay, dividend capturing. We just want to capture the dividend and move on to the next stock without losing any money. The way we do that is by some ingenious software that we have created, which goes into the data stream, finds all the data, sifts through it, do some mathematical equations, some algorithms, all that kind of nice, neat, fun stuff, and isolates which stocks are getting ready to do what it is we want them to do by percentage-wise based on what they've done in the past. I know that doesn't really make any sense, but hey, it works and it's working fine. So, where do we stand at the moment? Well, yesterday we went through all the stocks, and I said that today we should be looking at Colgate-Palmolive because we should be collecting the dividend, which we did. So we collected the dividend on Colgate and ended up selling it for a profit of $645. Okay, not a whole heck of a lot of money, but it frees up $51,000 for us to buy something again for First Thing Monday. First Thing Monday, we'll be buying something in there, and we will be going through all the software and all the charts and all that stuff to find out which is the exact one for us. So let's just get out of here because not really much here. Because what I wanted to do is clearly point out the option strategy, because that is the one we had some questions on. Alrighty. Lovely. Interesting. Now it's not popping up. Lovely. Don't you just love it when that happens? Well, here we go. Technical glitch. We love technical glitches. Trying to figure out what we're doing. Now my icon, or my cursor, seems to be stuck. Wonderful. Okay, so there we go. All right, as we told you last night, before we closed up, we only had 2 positions this week because basically there was a lot of nothingness for this week. There's a lot. Usually we have anywhere between 8 to 20 positions in our option strategies. But this week we've only have two. Actually, only one. The second one, Lowe's, came in on Tuesday night, and that was because somebody asked a question of how do I find out if I could show them a 1% trade. So I was looking through and find out what was going on, and I found a interesting little trade from Lowe's. A nice thing about Lowe's, it had a lot going for it. It's Dividend King, number one. Number two, all the charts and all the graphs looked great. And number three, all the software looked great. And then we found a trade that we could actually make 64% return. So we said, all right, heck, let's do it. So we're going to take a look at Intel, and we're going to take a look at Lowe's, because they're the only two we're looking at today. Excuse me, my goodness. These live shows have a tendency to catch you in your humanity, so to speak. You're tired, phone rings, people come in and interrupt you, you cough, sneeze, all that kind of stuff, and it can't be edited out because it's live. All right, so let's go to Intel and see what we're looking at. Got Intel pulled up here. INTC, which is Intel, you all know that. Intel starts the year off at 31, goes for a couple of weeks, and then drops down to the low of the year, which is 29. Okay, it traded for about a month in the $29 area, jumps back up to 31, travels about a month and a half that way, and then she slowly makes its way up to the high of the year, which was around 38. And that was back in September. And it flounders back around 34, comes back around to 36, goes sideways for a couple of months, drops down and goes sideways on the 35 area for the last 3 months. And she settled in at 36, 38, where she is today. Now we jumped into Intel on Monday and we'll probably do Intel again next week. Now the reason why we're doing Intel twice is because the dividend's not for 2 weeks. It's not this week, it's not next week, it's the week after. So we have another whole week to play Intel. Now Intel, I believe we only made 45% on that. So we did let me show you what we did. Alright, we actually bought 100 contracts. Now, the only reason why I bought 100 contracts of Intel, because I had no other trades. It was the only trade I had for the week, and I had to make up for it somehow. Alright, so we got the 35 and a half call. What does that mean? Because a lot of you asking me, how do I find my my targeting, my pricing? Well, I don't. It's the software that does, and it's the stock market that tells me what the pricing is. Okay, on Monday, let me isolate this a little bit. Okay, Monday, which was the 17th, the stock was at 35.44. Okay, it opened up at 35.44, hit the high of 35.59, and it closed at 35.48. Now, that's the stock market telling me that the stock is at 35.48. That's where it was on Monday. All right, I should back up and go to Friday, because I got this tip on Sunday, and you guys got it on first thing Monday morning. So you would have taken a look at the same information that I looked at and saying, all right, what am I looking at? Okay, last Friday the stock closed at 35.25. She opened up at 35.55, had a high of 35.76. So that's the area it's at now. Now we want to back up a little bit. Okay, this is where she's been trading for the last few months. Okay, down, up, down, up, down, up, down, up, down. Here she is. From middle of February, she's been going sideways in the 36, 35 area. Okay, so that's where I got the idea, or that's where I got the number from, the 35. Back up. Let's come on, open up. Little pig, let me in. Okay, see my 35 and a half. So Friday, this is where it was. So Sunday, I'm looking at this, getting ready to make my trade for the next day. So I make my trade at night and saying, all right, this is where the stock is. It has all these down days. Look at them all. 1, 2, 3, 4, 5, 6, 7. Normally I would not jump in to a company that had that many down days in a row. So I kind of waited the Monday morning to find out what she was going to do. So where was I? Oh my goodness. So the 35.50 is where I came up with, because that's exactly where the stock was. First thing Monday. First Sunday, sorry. All these weird things. INTC. All right. That's where she was, 35.50, 30.35. A better way of showing you this is, let me show you what next week's looks like. Because right now she's at 36.40. Let's close this one. All right, if I buy the 36.50, let me explain this to you slowly. Where the stock is right now and where she might go are kind of important, okay? What I don't want is I don't want to have to rely on it going somewhere. What does that mean? If the stock moves up and makes money, hey, great. That's wonderful. But what if the stock doesn't move up? What if it stays where it is? Is my position going to make me money? So I always want to make sure when I'm buying something, I look at the position that I'm going to be getting into. Okay, the 36 and a half. Because right now you can see where the stock is. It's at 36.40. Okay, if I get the 36 and a half, the stock has to move up in order for me to make money. It has to. There's no other way. Okay? Now, if I got the next one down, 35 and a half, 36, she's already past 36. As a matter of fact, she's 40 cents past 36. Okay, so if I buy that one, here you go. The 35 and a half and 36. The stock can move up, I'll make money. The stock can stay exactly where it is, and I'll still make money. And if the stock goes down a little bit, I'll still make money. That's how I find my position. And it has to be profitable. Right now, it's going for 34 cents per contract. Not 34 cents a share. Okay? So if I buy this one, it's going to cost me $355 to buy it. And the most money I can make is $160. Now 160 is a little bit less than half. So it's like 48%. Okay, now 48% for it to stay where it is, hey, I'm all for it. So just for the fun of it, let's buy some. Okay, so what I'm going to do is I'm going to buy another 100 contracts of Intel. The 36 calls. That means I'm just buying the spread between the 35 and the 36, which is 35.50, which is right here, and the 36, which is right there. So as long as it stays above 36, okay, the 35.50 is right there. See where my cursor is? And the 36 is right there. So as long as the stock stays above it, then I will make my 45% next week. Okay? So where are we right at this moment in time? Also, basically, Intel's a no-brainer, so we're going to be, well into the money on this one. So I honestly don't think it's going anywhere. All right, now quickly let's look at Lowe's. Lowe's is the one that someone asked me, hey, can you find me a 1% trade? Sure, I can find you a 1% trade. Why not? Let's go back to where we were. LOW. Alright. First, let's go back to where we were. Let's explain this one a little bit. Okay, here's Lowe's. This is the one we came up with on Tuesday night, and I did it first thing Wednesday morning. Now, let me tell you why I'm excited about this one. Okay, well, Lowe's starts the year off at 76. She trades for about a month at 76. She jumps up to 79, trades for another month and a half at 79, jumps up again, and trades for another month and a half at 81. Drops back down to the 76, trades a couple of weeks there. She drops down to 72 area, trades for a couple of months. This makes the low of the year, way down the 60-something area. Jumps back up to the 72 area, and now she settles in to where she is now at the 83.55 area. And my computer is stuck again. I hate that crap. Okay, so at the 80. So Lowe's is at the 83.55. I just got filled. 83.55 for Lowe's. Now our position on Lowe's. Here we go, right here. View our trades. Oh, we got 100 shares that we bought at 82.40. I can just sell those. And then we have 100 contracts at 81.5, 82. So as long as the stock stays above 82 by the end of today, I will make my 64% return. Now, I am so tempted on doing this trade one more time, but I'm not going to. Now let me tell you why. Because Lowe's has its EX date Monday, next Monday, which is 3-4 days away, Monday. And most likely it's going to go down after the EX date. So I'm not going to do it again. I'm going to take my 64% and say thank you, which is $2,300. It's not bad. So this week I made $3,500, which makes up for the $3,000 I lost last week. Or was that the week before? I forget. Anyway, I don't really pay too much attention to it. Isn't that funny? I don't pay attention to wins and losses. It's just a game. You just roll one after another after another. So this part of the game we're at is looking at Lowe's. She's at 83. Now, don't get me wrong. There is a chance for it to drop down below 82. But really, you get 12 minutes left. There's always that chance. Always. Always chance. But we look at odds and probabilities. The odds and probabilities are most likely it's going to stay above 82. And as long as it stays above 82, we make our 64%. All right? I'm pretty much sure that wraps it up. I'll see if I have any questions. I probably doubt it, but give it a check anyway. No questions. Gotta love it. All right, with that being said, wrong one. There we go. This is James. We're signing out for Dividend Stock Talk. We're up 40%, and it is 12, 13, 14, 15, the 15th week of the year. Okay, last year we were 62% for the year, and this week we end up at 40% after week number 15. We got quite a ways to go, and we're still, that's crazy. We might actually hit over 100% this year, which is nuts. But that's due to Donald Trump. So, don't get me wrong. I'm not a fan. I'm not touting his colors or anything like that. It's just a non-political president making the stock market do crazy stuff. So this year is going to be a little awkward. So we make 100%, big deal. We'll just move on and go to something next week. All right, this is James signing out from Dividend Stock Talk, and we will catch you next time, won't we? Huh. There you go. Dividend Stock Talk. This is James signing out. You guys have a great day, and I will check you the next time around.